How do you capitalize and maximize buying real estate during multiple cycles? This is a huge imperative framework to know and master. We have to take over 2025, especially in this kind of climate. This is market cycles, buying real estate, buying businesses, buying stocks, all tying together in one way or another based on market cycles. You can see it across all different boards. Now, my real estate team, my wife Melanie, has done $1.5 billion in real estate transactions over the past few years. Yes, billions would be. So I've seen tons of transactions across many, many states, not just here in Austin, Texas, but across the globe as well. And I see these same cycles happening on all different facets. What's up, Ali? Hello, Clean. Thanks for watching this live video, an Elite Edge podcast. We go live every single week, Monday and Friday, breaking down all the best things real estate, entrepreneurship, psychology, marketing, and so much more. Give you the edge that you need. This is where top players become world class. This podcast will give you guys the elite edge you're looking for to have massive wealth and riches in your life and your family's life as well. Make sure to subscribe, hit the like button, tag your friends who you know that would love to see this kind of content. Now, before I go too deep into the real estate market side of things and the market trends from that aspect, we should first take a step back and look what's happening on an emotional level. At the end of the day, humans are emotional beings. We are creatures of emotions. So understanding psychology gives a better understanding of what's happening when it comes down to doing real estate transactions, investing, business cycles, and so much more. You guys know I love mental frameworks. So I'm going to show you guys a few of these. This is the first one. There's more coming. Make sure you stay to the end to see how the real estate market is going to be happening in 2025 here in Austin and also across the board as well here in USA. The first thing is first, this is cycles of emotions. Now, this is an imperative thing to understand and realize. So when you understand this, you understand all real estate marketing business cycles as a whole. Now, cycles of emotions, similar to my informed optimism diagram I told you a few weeks ago, is kind of the same exact thing here. When we first start off on this section, we have optimism. Optimism is in the first section there. It allows us to have way more, enthusiasm for life. This is where we start off at. We're always excited about the future. What can happen next, what's not happening, and how can we control our destinies. There are many points, though, in our diagram that really brings back to what people are doing on a rational level. I love this quote by Warren Buffett that details this so much pretty soon. And the quote goes like, if there's blood in the street, that everyone should be buying. Most people get news from their Uber drivers, from their friends, and people who had no clue what's going on in a certain sector. And then the next stage happened, which is excitement. They hear this news, and now they're excited thanks to what the friend just told them. And because of that, people will do risky investments. Now, I won't break down every single one of these, but next one is still. So there's the next diagram, and finally we have euphoria for the next pit point. Euphoria is a huge, huge point we see our next cycle of emotions in buying real estate. In 2021, this is prime example of what happened then. In 2021, there was around 1,788 homes, so 1,700 homes on the marketplace in 2021, which is less homes we've seen in the past decade. And right now, in the opposite spectrum, there are 15,000 properties right now on the Austin, Greater Austin marketplace, which is more homes we've seen in 15 years. Think about that. Almost 10 times more homes. And this is when we have euphoria. People think to themselves, what can I buy next? What is my next investment? What should I be making moving forward to have massive gains? This also happens when it comes to cryptocurrencies. I know a lot of people who are super bullish in crypto because of the same exact reasons. There's a lot of hype, a lot of excitement. And normally you see a huge wave of people doing something, we should normally do the opposite. Now, in some cases, you can't always do that because you still have to make a living, make an impact, and still do things. But one of the biggest things here will give me euphoria. It goes to our next point. This is our next point. Actually, I'm going to make this in red. Let me showcase what this is. Our next point is risk. Risk happens after we have euphoria. People are all crazed and hyper and super excited on what's going on in the marketplace, and when we're the highest of the highest. And in real estate and all things in life, this happens. Not just in real estate, but people as a whole. Again, it is about informed optimism. When I have a new thing I see, a new business opportunity, a new client, a new partner, a new X, Y, and Z, a new diet is 2021 sale, you get super excited. You have informed optimism. Like, wow, this is amazing. I'm going to love it. My friend said it's great. It's super easy to do. And after, about 2 weeks, 4 weeks, maybe in 8 weeks, we get burnt out. We see the flaws. We see the things trapped in the closet. All these things, the red flags, we didn't see before. We go down to our next point in the same kind of diagram here, from informed pessimism to informed pessimism to uninformed pessimism to informed optimism. Like, wow, I don't know what's going on. This is not fun. I don't like this. This is driving me crazy. And now I have a informed pessimism. I now know how hard this is. I know how hard this market is. What happens next is the value of despair. We see, wow, it's way harder than I thought it was. We go to our next point. We have anxiety. And then we have despair. So this cycle happens not just on a business level, on a real estate level, but all things from, again, diet, relationships, spouses, dogs, everything to think of. We see the same that thing happen. This mental framework is so powerful to me that I have it on my phone on not my main lock screen, that's Alexander, obviously. On the next one, you can see my lock screen here is the same thing in the bottom. Once it pops up, maybe. Yep. Uninformed optimism, informed pessimism, crisis of meaning. I use this diagram so often because it's that powerful. Because we are creatures of emotions. And then from there, we have despair, we have fear coming up later. We go down to desperation, we have panic. People lose their diamond hands. And finally, we get down to this last point of hopelessness. Hopelessness happens next. Excuse my sloppy handwriting. May I make it a little better for you guys so you can see what I'm writing. Hopelessness, just about as bad. Hopelessness is the next point. But hopelessness, panic, fear, all these things bring us to our next point, which is my favorite point. This is opportunity. Opportunity happens and comes when everything is in panic, in disarray, when depression happens, same for recessions. This is when all this happens. Now, all my super successful friends and clients, and myself included, we are super excited about this time in the marketplace. When recession's happening, this is when people are super bullish. Warren Buffett, again, has like $1 billion in cash right now. In cash. For this exact purpose. The opportunity comes, that's when we have the biggest opportunity to make massive wealth. When everything is super high, super good, and super lucky, this is when you should be less bullish and more bullish the opportunity time. People are going for depressions and so forth. As awful as that sounds, this is why market trends is so imperative. And down below, what do you think we are right now? What market do you think we are in before I get that point myself? You think we're in a risk point or hope or inside an opportunity? What part of our diagram do you think we are in currently inside our marketplace? And then after we have this, we go down to hope. People who are the most majority, again, the goal of the Eds podcast is to be outside the 99%, to be the 1%. And the 1% not just net worth, it's how you think, understanding these mental frameworks. Because then you get relief, and then you're back to optimism. And it all goes back over again. Now, here's the thing, though, about these cycles of emotions. This can last a day, a week, a month, years. There's no exact time frame for how long this lasts for. But understanding this gives you a huge leg up on what's actually happening on a much granular scale. Again, so often I see so many people forget this one core concept, that when we are doing our whole entire investment strategy, our business strategies, and so forth, we gotta make sure we understand and remember that this is what keeps people rich or poor. It is what do we understand about the human psychology on a mass and base scale. That's why I said before in my mini post that the super successful people in the world, they study psychology, human behavior. They study on a much granular scale. Understanding this, we understand the marketplace. Now, again, I'm going to break down to you guys what to expect in the real estate market for 2025. That's my job as a real estate agent. I love doing it. Again, my real estate team, Elite Real Estate Group, has done $1.5 billion in transactions so far over the past few years. So I've seen all these things time and time again. And this works on transactions. I see the same thing happen on transactions as well, from buying new places, selling new homes, and so forth. This is a huge, huge benchmark that we see all the time. So this is cycles and emotions. Now, our next point, I think, is going to be super easy to understand now. But now I'm going to break down exactly the market cycles. We just broke down emotion cycles. Now let's break down market cycles. So market cycles, next big point, and this is actually more like a quadrant. So I'm going to add that little quadrant there. This is more what it's going to be like for us. Now, we understand the emotion side of things. We go super heavy into the quadrant side of things. We're going to see the same exact like diagram almost. We're going to see this. This is the same exact thing we saw before, but this is more of a quadrant than the last one. You can see it broken down to 4 different major areas. All your different colors make it super easy to see this. You have one quadrant, and then let me make it easy to see. And so far, guys, now you finished the video. Make sure you smash that like button, tag your friend down below. Who do you know that love this kind of things? They would love to have a leg up in the edge in the new year. And if you have any questions in the meantime down below, drop your questions. Happy answering your questions for you. This is what I'm doing this for in the first place. So we have first section. This is going to be quadrant 1, 2, 3, and 4. I'm going to give you guys a little number thing. So number 1, number 2, number 3, number 4. So we have 4 quadrants in this little diagram here. And the first one is recovery. Recovery is our first section. Normally have this kind of diagram here. We can normally see it can be a couple of things. One, there's no new homes. This is a big indication on if we're recovering or not. There are no new construction happening in your marketplace. It's a telltale sign that we're currently in the recovery section, because the builders, developers, and investors are recovering from the past market cycles that we just went through. So recovering is huge. We're also going to see, as this goes up, a huge decline in vacancy. So declining vacancy will happen. We will see much less homes being leased out, commercial buildings being leased out, and so forth. You saw with COVID, not just market cycles have an effect on this. We can see these kind of things happening from crisis around the world, from recessions, from new policies, new presidents. We can see these things happening from a new change in business models. In 2021, we had a new change in business models. People saw that you can do work from home, you can do Zoom meetings and so forth. A lot of companies changed their business models, meaning office spaces. So then going down to saying, okay, you don't need offices anymore. Now let's do at-home working. So single-family homes here in Austin that had an extra bedroom, had an office, had an ADU, with an additional dwelling unit, became more a popular thing. Business models will change what's happening on a large scale. So again, understanding the emotional cycle is key, but you also got to keep out and looking for trends. What's happening on a mass scale? Is AI changing in the future? Is commercial places that being used? What's happening on a more grander thing? But number two will be two big things. No new homes will be happening. You probably can't even read that, but no new homes will be happening and declining on your. Let's make it easy for you guys to read and take pictures of this. So, no new homes is a big one. So, no new homes and declining vacancy is next. So, this is the next big expansion there. Declining vacancy, you're going to see coming forward afterwards. Now, to make room for the next point, I'm going to erase the skin though, just so you can kind of see what's going on. And I'll just say this is going to be DV for declining vacancy. And quadrant 2 is up top. Quadrant 2 is expansion. Expansion is next on the list. We're going to see expansion happening, which is going to be more long-term occupancy. More places of renting for a longer time moving forward. And this is kind of when you want to capitalize on rising demands. Develop more places, flip more homes. This is a time to really start doing massive deals. Again, I think that too many gurus out there will tell you flipping is the best strategy. Long-term holding is the best strategy. Wholesaling is the best strategy. Let's face it, in real estate, there is no best strategy outside of buy and hold for as long as you possibly can. Because if you hold a house long enough, it will double, triple, and not more, quadruple in home value for you, which is equity in your bank, which is true wealth and net worth. Now, that besides the point, we can't hold places. We want more capital to capitalize on expansion markets. And number two, that's going to be time to flip places, buy land, build development, build commercial units, build complexes, and really have a massive hold on what's going on. We have a more long-term occupancy rate. This is the best time to really capitalize on what's happening on a more scale. So if you see this on a emotional scale, on this regards, this is kind of the time when you see it at the lowest. Expansion is like the flip-flop adverse effect what's going on this. When the opportunity is happening, you can buy the best deals and so forth before it comes costing down on the opposite side. Now for next point, number 3, this is hyper supply. So hyper supply is our next big point for number 3, our next quadrant. And this is when you kind of see on this point here, this is more like demand supply is now equilibrium. It's even, it's now working together and have a more, everyone's happy. There's a good supply of buyers and sellers at the height of this point. And then from there, we can help them see a downtrend. This is when we're kind of in a euphoria phase. Or, oh wow, life's so great. I'm super optimistic. This is the best market ever. Now I'm hyper supply, which as it sounds, we have a lot of new construction homes being built. Builders who just saw the expansion from over here and flippers and investors said, let's build more places before it crashes. And then come over here to hyper supply. With hyper supply, we see an increase in vacancy. So increase in vacancy when we see it here. So vacancy plus. There's way more vacancy during quadrant 3. This is the time you want to find a way, if you can, be cautious and buy more for cash flow and appreciation. I say to you so often that for me and my clients, I tell them the number one thing to buy a real estate for is appreciation for the long term. But for the short term in these kind of markets, you're not going to be buying for appreciation. You're buying for cash flow. So places in the Midwest, places like that, and like the up north quarter places have more kind of things happening on a cyclical market cycle. So it's really important to understand that as well. Start buying for that. Here in Austin, Texas, we have gone up from 63, 65 days last year of average days on market up to 87 days now. 87 days average on market, which is crazy because we're now hyper supply. So right now in our market in Austin, Texas, we are currently in phase 3. So big store there, we're in phase 3. And this for context, my real estate team, again, $1.5 billion in transactions, my average days in market across all our listings we've sold this year is around 14, 16 days. My fastest I've sold a house in this year was 2024 was 4 hours. And on average, we normally sell most of our properties in the first week or two. We have multiple offers above asking price. My highest house I've sold for my cost above asking was $150,000 above asking price. And then my highest discount was $352,000. Think about that. One house for $1.2, $850,000. Massive discounts. So again, during hyper supply, like right now, this is the best time to buy properties. This is when you start seeing, more people taking bigger risk and so forth. It allows to have more opportunity to have massive, massive gains on homes that are not selling for a long time. So this is supply number 3. We're at currently in our marketplace here in Austin, Texas. But again, like I said before, with presidents, policies, COVID, those things play a massive role where we are currently on market. But it's also not be across the board. So if you live in Austin, right now you're in supply number 3, hyper supply. But if you're in, Plano, or you're in Lawrence, Kansas, or New York, it's gonna be different. Because every single place will be different based on that market as well. So if you're here in Texas, this is gonna be prime across the board for most major cities. And our fourth one is gonna be the one that no one likes, other than investors, is recessions. Recessions is our next point. This is actually when opportunity is the biggest here. So over here, we have euphoria. People are happy in the emotional cycle. Super, super happy. People are now expanding. Everything's great. They're buying more properties, doing more things, building more stuff. It's going to match the same exact place for emotions. But again, emotions is going to be more like this. This is the emotional diagram there on the green line, and the black line is going to be the market trends for real estate. And right now, we have recessions happening. This is going to be more competition. More competition happens during recessions because the people who understand the mental framework behind market cycles say, great, if I buy a lot of places right now, when nothing's selling, when homes are below market value, people are doing massive incentives to get longer term leases and so forth, I can start ramping up for Q1. There's no new homes yet, but I have a big portfolio already being built and preparing for this next mark or space number 2. Now, what's nice about real estate is that we will always see a circle. We'll always see a circle. Now, what we do, there'll always be movement around and around and around. This is how real estate works, how emotions works. This is how all things in life works. It's a never-ending cycle. Even the weather. Here in Texas, we only have 4 seasons, but sometimes we do. Right now, it's like 28 degrees outside. More often than not, you always see cycles repeating themselves. If you hold out long enough, you will have a point where you can expand, have more supply, more recessions, more so forth, always moving forward. And cautionary tale for you guys, I've seen a lot of people who don't time the market correctly and will start buying homes for flips, for example, during the expansion time or hyper supply time and hoping that it stays this way. The problem is we don't know if it's going to be 1 week, 1 month, 2 months, and so forth. We just know it's going to happen eventually. So you do so, you will start predicting the market and fall into that category. So again, there's market trends when it comes to the real estate market as a whole, from recovery, expansion, hyper supply, and recessions, but also on a seasonal level as well. On a seasonal level, you have here in Austin, all markets like this. A little blimp, but overall it's pretty steady. It's pretty much always hot and nice all year long. My father-in-law, my wife's from Minnesota, it's like this. It's a huge market trend because over there it gets crazy cold. People don't want to move and leave. This is why it's so important to understand this on a deeper level on top of that. I'm going to say in Austin, if I'm currently in hyper supply, that means I can get better deals on houses, and I can buy properties either here or here. If I can delay my costs for the longest possible, if I have creative financing or lower rates or good incentives and so forth, or concessions even on buying these properties, I can time my build, my development, and so forth to be happening during expansions. So you can read the market with a good agent like me helping you do this. You can predict what's going on and advice supply to do so. Another thing I'm going to add as well is don't fall traps to gurus telling you this is your last chance to do X, Y, and Z. There will never be a last chance. There's always opportunities. Think about that. Maybe you missed Bitcoin going to 100K this time, but at one point in time, it was at 50K. It was a huge thing. For real estate in 2021, it was a huge market for selling. Not for buying, but for selling. And that'll happen again eventually, which is why it's so important to have diamond hands almost when it comes to buying real estate and planning for the long term. Because at the end of the day, none of this matters if you're a long-term holder. If I buy a property in the expansion time, or I buy it in the recession time, and hold it long enough, I will make a profit. The problem is, I see all the time, right now, we have 2 full sell-by owners who need help selling their house. And both of them bought their properties in expansions in 2021. So let's see if I can make this bright enough for you guys. Let's say this is 2021. This is 2019/2020. We have 2024, 2025. And then this is going to be 2027 is my guess, May 2026, based on what I'm seeing currently in the market. Let's say 28. Plus, this is how it's going to cycle here. Every 10 years, give or take, you will have a whole cycle moving forward. Normally 10 to 20. So every 10 to 20 years, you should see a cycle happening on this diagram. If that does happen, if I buy a home in 2021, if I force my owners are doing, buy it tight and want to sell, then the hyper supply, where there's 10 times more homes almost on the market. And want a higher price than they bought it for. It's impossible. Because at the end of the day, I am one of the best agents in the country. Again, I am top in my brokers at EXP Realty. I had done $1.5 billion transactions for my team and so forth. And I can bring you millions and hundreds of millions of people to your house. But if you're priced incorrectly, it won't be a huge effect, especially in this market right here. And this is why I'm so big on being priced correctly, being data driven, marketing focused, and client success obsessed. There are three core pillars. By having these allows to have more opportunities for you to get the best deal for your house in any market. But in the day, if you can hold your home long enough for a whole cycle or for at least half a cycle, back to recovery to expansions, you have more opportunity to get bigger gains. So this can be kind of a breakdown my super, sloppy board now, but this is how it works. There's four main sections. Write this down. We have recovery. This is our first section in market trends. This is when no homes are selling, and during this trend, this is when you should focus on undervalued properties and long-term investments. So write this down. Number one is phase one recovery, market trends. During this section here, there are no new homes being built, and there's going to be a huge increase in your declining vacancies. So less homes are staying in the market when it comes to buying and or when it comes to leasing, because there's not enough homes right now on the marketplace, at least not yet. This is recovery. So during recovery, buy for appreciation, buy long term. Have that in your mind and the forefront as much as possible. On a much more deeper level, to say you're an investor, during recovery phase, you should buy undervalued properties for appreciation and wait for market rebounds. If you're a homeowner, you should be buying places that allow you to lower your prices before the market rebounds. So I'm doing for all you guys, for investors, homeowners, and for developers on this stage too. So if you're a homeowner, you want to buy for more likely, undervalued properties if you can, but more importantly, take advantage of the low prices. During these sections here, then we see lower interest rates. So buy for that. Our next section for developers, during recovery phase, you start planning and permits ready for yourselves. And for those who are developers, you probably already know the market trends already, but for more context for you guys, this is the time to start planning your attack. Before the market has really taken off, plan your attack. Number two, our next big point here. And number two, this is expansion. This means to capitalize on rising demand, develop more places, flip more houses, take huge risks. Because during this time, emotional point, this is kind of when the opportunity happens on the flip flops. So in most sense, it goes both ways. It goes from opportunity and risk, but it flip flop back and forth depending on who you are. If you're an investor, when it is super scary over here, you get the biggest opportunity and the biggest risk when it comes to buying more places. When the selling places, though, you mean golden. So all kind of depends on what you're doing for your goals. Also, for expansion number two, you can write this down as well. If you're a investor, you should be flipping more houses. You should be expanding, doing more development. You should be rising your property value. You should be increasing rents. This is the best time to do that. If you're a homeowner during expansion, you might be thinking about selling. This is about the best time to sell your house if you need to. Again, I'm a huge advocate of never selling property if you don't have to. Again, most of my clients, I would say 95% of them, are sellers. They were the best in the world at selling people's houses. If you help doing that, let me know. But if you want to sell, this is the best time to do so. Again, if you hold it long enough, you can always get good returns on your house. But this is the best time to start competing with home buyer demand. And if you're a developer, this is when you can start accelerating the projects. Hire more contractors, hire more floormen, make sure the job gets done quick enough to outpace hypersupply, which is our third section there. Hypersupply, you should start prioritizing cash flow. Again, in this section here, you're not buying for appreciation. You're buying for cash flow. You're buying for opportunity. You're holding homes for that regard. If you're a homeowner, this is when it may take long to sell houses. That's why in today's market, 85 days is the average days of the market for most agents and most homeowners. Like me, I'm doing it within 2 weeks or so because I'm world class at what I do and I understand the data behind it and I understand pricing, psychology, and so much more. But I can help you all 50 states and 27 countries from the buy and sell real estate. But this is a big part of that. And then for those who are going to be a developer, same exact thing. This is when you taught preparing your projects if you can, getting off the books as fast as possible. You should be trying to find ways to identify new opportunities that will be more advantageous for you to do 1031 exchanges into as well to kind of safeguard your money. If you can do that too, this is hyper supply. And then, of course, in recessions, this is when if you're a homeowner, I would say like during recessions, it really depends on what you're looking for. If you're an investor or a developer, you want to find places that have huge demand for more likely all things with beat up homes. So I make it as nice and tactile as possible. Beat up homes we look for. Homes that are distressed. These places are the best ones to buy during recessions. If you're a homeowner, comes to hill, this is all the time for me when you should start fixing your house up. You should start finding ways to add more value to your property. You just find ways to hold off on selling. So right now, if you sell in this section, it'd be super hard for you to have any really massive gains. This is a buyer's market through and through. But this is the best time to buy properties for the long term. Again, I say before, more competition on the buy side, but also more competition as well with having massive wealth gains for you too. And developers, again, if you can, I would try to complete your projects as quickly as possible. Is the next plays with no new homes. Because in recovery, people want to buy houses again. The pent up demand now. If you can capitalize on that, you're a more successful, robust business. Now, down below, what is your favorite thing to do? What's your favorite cycle? Are you an investor? You want to buy places in recessions? Are you a seller? You want to do something in the hyper supply section? Are you a developer? You want to do more things on the expansion side? What quadrant fits your needs more? Down below, let me know. Again, ask any questions you have. But I would say for investors doing all strategy or all sections right now, I would find a way to really get the best deals for buying homes. So right now, you can buy a lot of homes way below market value. Again, my biggest savings this year was $362,000 for my client, and it's one house. And then main homes kind of close to that price point as well. So it's the best time to buy properties. And this allows us to have really maximize competition moving forward. But again, I go live for you guys every single week at 11 a.m. more often than not, CST time. Break down all things real estate, marketing, psychology, so much more. Give you the edit you need in your business to have massive success. As always, thanks for watching. This is where top players become legendary. See you soon. I'll see you at the top. Here's to the edge. Again, understand this diagram. Understand most of the diagram. More importantly, you can do what you want in your whole life. But everything at the end of the day is ran by emotions and market trends. Thanks for watching. Make sure you tag your friends, share this video, subscribe as well. I'll see you on the next one.